What I'll do for the next 5 minutes, if anybody has any questions, drop it in the chat. Got one here from Greg, is asking, what kind of returns are you looking for and how long do you typically plan to hold your deals?
Okay, so great question. And I would say we had a boom economy 2012 to COVID. Phenomenal, unprecedented economic expansion. I think we're in good shape and the economy is going to do well. I don't think we're going to quite duplicate what we had those 8 years over the next 8 years. So I think hold times are going to get a little longer. I think returns are going to be a little bit less. So in my mind, probably looking 5 to 7 year holds. And realistically, if you can get 6 or 7% cash on cash average return over the hold period, I think that's pretty good. Maybe you can get 8. And I'd say internal rate of returns, if you could get 13, 14, 15%, I think you're doing well. And that's certainly adequate for me. If I see a deal that's promising a 21% IRR, my initial reaction is I'm skeptical. Because it's just hard to see how you get there when you're buying at a 4.5% cap rate, unless you make some really crazy assumptions about what you're going to do on rent. You know, if you read books like Millionaire Next Door and blah, 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 they're happy to make 6 to 8% consistently. So if you can do real estate deals and make 12, 13, 14% internal rate of return, you're going to double your money every 5 years. That's a good deal. And so I'd say temper expectations. You can still do very well, but that's kind of what I'm thinking. 12, 13% IRR. The Greenville deal, we're projecting an IRR between 13 and 13.5 for our investors. I think we may do better, but I'd rather promise 13 and do 15 than promise 15 and do 13. And right now we're off to a good start because rents have gone up dramatically. But I think that's kind of a realistic target to shoot for.